Amazon went public in 1997. If you had invested just $100 in Amazon back then, you would have made almost $1.3 million. Let's say you would have been a bit more generous and invested $100,000. Your net worth would be $129 million. Unfortunately, you missed your opportunity. But you shouldn't be sad because in the middle of so many worthless online companies that were launched in the 1990s, it was extremely difficult to predict that Amazon will be one that will cross $1 trillion valuation 20 years later. However, we are now in the middle of another great opportunity. Even if you do not have $100,000, you can make a difference by investing as little as $1,000, which we are about to talk about. But before we start, welcome to Finance Advocate, where future entrepreneurs and investors come to get educated and to be inspired. Make sure you subscribe to this channel and don't forget to click the notification bell so whenever we upload a video, you will be updated and you can start your journey in finance. Also, please give this video a big thumbs up, and if you have any questions or thoughts, feel free to leave us a comment below. Now let's get back to the video. So let's start with the first one. Pick up 2 to 3 stocks. I know that many of you would point fingers at me and say that you would need much more than that to earn a reasonable amount out of stock market. And I totally agree with you, but I want you to look at it from a different angle. In the last 12 years, the stock market has only been growing. If you take a look at any well-established company, you will realize that their stock has been going upward. But due to the unforeseen pandemic, everything is down. But we all perfectly know that sooner or later, the pandemic is going to be over and life will get back to normal, at least to a certain extent. Companies like Apple and Coca-Cola and a few others are so great that the risk they would go broke is shallow because they sell products that people either need or strong desire, and they are perfect at doing that. But right now, their stocks are sold at a huge discount, like 30 to 40%. And if we are going to a recession, then you can expect a further drop. So it's a perfect opportunity to double your $1,000 or even triple it in a very short period of time. Take an example of Adobe. It was down by 20%, but since they create products we all need, the stock price has almost completely recovered. Whoever invested at that already made a huge return in just a few months. Don't choose many companies. 2 to 3 would be a perfect choice. You can, of course, bet on some of the riskier companies such as airlines that have suffered more or automakers, but remember, if you're going to take a bigger risk, you should be willing to lose that money in case if things go wrong. My next choice is gold. Gold is of course not a great investment and it's quite useless in many cases. I'm not denying the fact that it has some purpose, but so does iron and many other metals. But it does not produce anything. It just sits in the corner and shines. It might make you feel good when you look at it, but that's not about it. Gold's most important role throughout history has been preserving wealth. The future is unpredictable. Financial crises, wars, instabilities happen all around the world, but the faith in gold never fades away. Yes, of course, sometimes it's high, other times it's low, but it's always there in some form. In fact, when there was a gold standard, inflation was literally at 0%. But why gold is a good investment now? During good times, when the economy is doing fine, companies are growing. The GDP is hitting records high, so gold prices do not rise that much. They rise together with the rate of inflation. Investing in gold would be a horrible choice when you have an opportunity to invest in a stock market and double or triple your rate of return. However, when there are chaos and instability, people are afraid. Their primary concern isn't to make more money even though it's a golden opportunity, but not to lose the money they already have. And they would do everything to preserve it. So when they see the stock market is doing terrible, often people move their wealth to gold because they know that gold will always keep its value. That's why during any instability, gold prices soar. In the last 6 months since the pandemic has started, gold prices rose from $1,450 to $1,700. And if the crisis keep going, gold prices will keep rising. But here's the problem. Sooner or later, the crisis will be gone and people's confidence in the stock market will be back. So more and more people will invest in the stock market and less in gold, which means that gold prices will fall. That's why you have to exit the market at the right time before gold prices will collapse. When is that going to happen? Well, that's your job to figure out. Number 3. Start a low-cost business. Back in the 1990s, when the internet was getting popular, some of the great companies emerged: Google, eBay, PayPal, and a dozen more. People literally made billions of dollars. Mark Cuban made an online radio and sold it to Yahoo for over $4 billion. And I believe right now we have a similar opportunity. Maybe not as big as dot-com bubble, but essential nonetheless. Because suddenly we all have to stay at home, but businesses can't afford that. They have to find a way to keep making money. So if you are a developer or passionate about that, right now with as little as a few $100s or even 1,000, you can build up something simple but helpful. Maybe an app that will help us stay connected while we are stuck at home. Since gyms are closed and a lot of people would avoid going to the gym until a vaccine will be available, an app that will help you to more effectively work out at home would be a great idea. If you actively work out, you can start recording videos on how to work out at home. Since I stopped going to the gym, all I do is Google and watch YouTube videos on the best home workouts for chest, biceps, shoulders, legs. I don't want to lose all my gains due to the virus, and I'm sure there are plenty of other people like me as well. Or even if you don't have any valuable skills, spend a few $100s to learn one as soon as possible, such as online and social media marketing. Spend another few $100s to test your knowledge and confront any business that is stuck in this crisis. They are desperate to find a new way to keep the business running. Colleges and universities were one of the first places that were closed down, and they will try to go online as much as possible, which sounds like a perfect opportunity to teach online. There's literally an endless number of opportunities. Do not jump into all of them. You just have $1,000. Pick up one and go all in. Of course, there's a chance that it might not work out, but if you make it happen, returns are incredibly high. Number 4. Cover your high-interest debts. Credit cards are great. I believe everyone should use them responsibly. Because if you wish to be qualified for a mortgage, be trusted by financial to get a loan for your business, you need to get a good credit score. And to build it, you need to use a credit card. However, quite often people blow it up, and interest rates on credit cards are freaking insane, like 15-20%. You must be financially super irresponsible to pay that much interest. 20% on $1,000 debt is $200. Of course, that doesn't apply to all of your debts. If you have a student loan or a mortgage, it will be wise to pay just enough to keep it going while investing the rest of the money. But whatever returns you make on your investments, your credit card interest will outweigh them. Especially in the long run, those interests will accumulate much faster due to the effect of compound interest. That's why getting rid of such debts should be your first priority. Number 5. Give your old self a gift. This is not the best option, and I wouldn't choose this option personally. Nonetheless, it might be a good option for some. We have already talked a couple of times about investing in an index fund, but of course, that $1,000 doesn't seem to make a difference. However, numbers tell us a different story. The returns on the stock market are different every year. Some years, it's as high as 10 to 20%. Other times, it's as low as 5%, barely beating inflation. However, over a long period, the average rate of return has been 10%, and with compound interest, that $1,000 turns into $53,700 over 40 years. Of course, $54,000 is going to be worth much less than 40 years from now, but still would be a considerable amount. If you're afraid of taking risk and you literally don't know what to do with $1,000, I think it would be better if you keep it in an index fund and use it when you retire. Who knows how your life will end up when you are 60 or 70 years old? That $53,000 might be crucial for you. Again, it's not a perfect option, but worth considering for some. I hope you guys have enjoyed this video. Thanks for watching, and until next time.